Great. It's another day, exciting episode we had with my good man, Crispin Daka. I simply call him CD. We had a wonderful discussion on the business environment, of course, in Zambia. So much discussion we had. And today we get into another exciting episode. This is episode number 2 on our podcast. And allow me to welcome my guest, who is now the host, Crispin Daka. Sidi,
Yeah,
welcome to this podcast.
thank you, thank you. I really enjoy our
Great,
sessions. Thank you so much. Thank you so much, RK. I'm super
great.
excited that we've gotten some time. Yeah, thank you for sparing some time so that we can get together, and chat and share ideas and see how we can progress and see how we
Excellent.
can leverage on the opportunities that are coming up out there. Super excited.
Beautiful. Excellent. Let's start our podcast today by delving into what's hot in the business news. I have two items, to discuss. First up, the president of the Republic of Zambia did address Parliament in his State of Nation address recently, and in his address, he did not forget to emphasize and mention the SI number 68, which is basically talking about local content, which you ably touched on last week. But I just wanted to draw your attention on what the president said, and in your own interpretation, the significance of that statement that the president made after the bill was passed.
Yeah. RK, it's a big one, eh? It's really a big one. So because for most of this, and sometimes uh, uh, what we miss is that I like bringing these things down into what it actually means in terms of how big the opportunity is. So, in terms of the SI, the local content SI, the major thing, of course, is the issue of ensuring that in terms of the mines, they need to in terms of the supplies to the mines, we need to have a significant local content. And without complicating it, like for any non-mining core expenditure, that is actually supposed to be 100% supplied by an indigenous or I mean a citizen empowered, under the CEC rules. So we have under the CEC Act, Citizen Empowerment Act, there's a definition of indigenization. So it has to be supplied by an indigenous business. So that is effectively the SI is creating demand. All right. And then on the core, they've now say, I think there's a recognition that there, of course, it based on expertise and so forth and so on, it can't all be 100%, but it has started at a very, very high level. So the first year is 20 to 25%. And this graduates in 5 years, it's going to get to 40%.
40%.
Now, if we were to put numbers to this, and we just get two mines, you get the FY 2024 financials for FQM, Kansanshi, the majorly, and you get for Lumwana. For Kansanshi, the numbers, when you now look at the financials and you just, add back so that you take away the issues of depreciation, which are not, non-expenditure
Items,
kind of, amortization, and you take out exchange differences and fair value adjustments. If you just take that back, you find that their spend for FY24 was 1.2 billion.
Wow, that's a big number.
That's a big number. And then Lumwana, had actually 600, 600, so it's between 600 and 800 million dollars together. So you're talking of 1.8,
1.8 billion.
yeah, 1.8 billion. So if we just say, okay, let's go with a 20 to 25%, we are saying, and we are looking at FY24 numbers. Those are FY24 numbers. So then the opportunity is actually $360 million for local content.
Wow.
To even upwards of 450 million. So it's a big
That's a
opportunity.
huge, Crispin, that's a huge number. That's a huge number. That's money available to be earned by the Zambian companies. That's a level of business. Excellent. Now, let's talk a bit about, let's talk about another exciting news item that is trending. The government, through the central bank, did issue out a bond, and there was some very interesting, development where the government only wanted a certain amount. I think it was about 4.2 billion that they wanted to raise through the bond. And surprise, surprise, there was oversubscription of the bond. Now it brings in a number of different dimensions, because on one side, the small to medium enterprises are saying that there is lack of liquidity into the market, and on one side, there's oversubscription on the bond. Just give a little bit of context to the bond itself, the subscription, and also the implication of the response that the central bank received on the bond. Just give it a bit more context.
Fantastic. Yeah. So before I even get into that, RK, I would like, first of all, to just come back to the issue of the local content. Yes, the legislation has created the demand, but unfortunately, that may not translate into SME growth unless the SME is actually, like the indigenous or local businesses, unless we actually step up. Okay, I want to include myself into that. Unless we step up as local indigenous businesses, this opportunity will just remain an opportunity. It's very similar to the one that was there in the construction space, where they said every contract should have a 20% local. But that didn't work so well, because at the end of the day, there was no capacity for the local contractors to actually execute to the required levels of on most contracts. Let me say that it's not all contracts, but by and large, that was the problem. So that would be the same problem that would have with the local content. So I'll get back to the issue of what that signals. But first of all, I just want to talk about how do we prepare ourselves as the business private sector to take advantage of this big opportunity, market opportunity that the government has created. How do we take advantage of that? So it is not, even though this demand has been brought up by law, it is not a compliance issue. It's actually a business decision. So from the mine's point of view, they're not just going to say, even mediocre, substandard stuff, you can give them. In fact, for them, they can't even accept it because, because of the sensitivity of what they do. We really need to have the local businesses step up. So it is what we call an ideal supplier profile. So what is the ideal supplier profile that the mines will be looking out for? First, they want reliability of supply. As a mine, in their business model, they don't keep stock. So what they want is the supplier needs to be able to have stock. So therefore, the supplier needs to have, minimum stock, so that whenever they need anything, just in time, you are able to, based on their needs and assumption on their consumption patterns, the supplier needs to be maintaining stock so that anytime they need something, this supplier should be there. So reliability of supply is one of the key aspects of the
Now you need to
ideal
share.
supply profile.
Yeah.
Yeah.
You need to explain a little bit why that is important to the mines. I mean, why is reliability of security of supply important to the mines?
They
We
can't
just need
afford
to.
to have downtime. They can't afford to have downtime. You can't say, no, I've got an order, I'll bring it 2 weeks. No. You see, for them, something has broken down, something is needed, it's needed now, and it needs to happen. So that, because their production is 24/7, that's why they work in shifts and everything else. So that is one of the key aspects. The other one is that they need a supplier who should be able to give terms to the mine, because as mines, they can't pay COD, they can't pay cash on delivery. No, you have to give them terms. Usually 30 to, I would say 45 is more like it. When you compute it, it's really 45 days. So as a supplier, you need to be able to provide terms. So what this all therefore means, RK, is that we have investment in stock, investment in datas. Okay, you need to be able to make that. As locals, we need to make sure that we have those investments. And then the other thing is to make the whole working capital work properly.
Cycle.
We need to have strong supplier relationships. We need to be, people who are able to have strong supplier support. But now what's happening is that, so working capital, we compute it by saying you have inventory, investment plus debtors minus payables minus the creditors. That's what gives you the net investment. So you can see that the creditors number reduces. But most of the Zambian local businesses right now, they don't have the supplier credit. Most of them are either they get deposits or they pay, so you find that most of them, it's maybe you would even say 0 to 15 days. So there is very big working capital investment that's needed for this opportunity to be executed. And just to put some numbers, so if we said, for instance, you need to keep 1 month stock, that's 30 days, right? And then you need to, data we're saying it's 45. So that means you have 30 days plus 45, that's 75 days. Okay? And then you have no supplier credit. Then it means if say your turnover is 1 million per month, then you actually need, because we're just going to get that 75 divided by 30, which will give you 2.5 times, times that. So you actually need, if your turnover is 1 million, you actually need something like 2 million to 2.5 million in your working capital. Yeah, because you have got no supplier. But if you say get some supplier support, then that number is actually reduces. And this is where now this is when we now come back to the issue of the oversubscription of the. So it means to unlock this for local businesses, they need transaction-backed support, working capital investment. They need to be helped. Otherwise, this opportunity cannot be executed on. Now, where is the source of credit? Source of credit, most of it is coming, obviously it has to come from the banks. But the banks, because they can't understand the risk that is there in the SME, because there are a lot of things that are not formal in the SME, they're not able to easily price that. That's why the signal now here is we have The government wanted 4.2 billion. 27 billion was, bids came in. They ended up on taking 9.9, meaning 11 billion plus was rejected, effectively rejected. Okay.
So it's
But
out
why?
there.
Why
It's money out there. Yeah.
It's money out there.
Yeah.
The attraction is because, of course, government security is seen as much more less risky
Secure, yeah.
compared to lending to, say,
Private,
an indigenous growing business, an SME.
Yeah.
So even if we said, okay, 20% of that 11 billion is actually from the banks, that would be like 2.2 billion in one auction. There's 2.2 billion that would be available to unlock the SME sector for this local content, only if the SMEs we organize ourselves. Yeah, we formalize a bit more. We give them what they want, so that then they are able to understand the risk. Because for me, this is something that the bank can easily manage if we give them the information for them to do that. Yeah. So that's why that for me is very exciting.
Yeah. Please go on. Go on, Crispin.
Yeah. So it's very exciting for me because the issue is the money is there. So therefore now it's just the SMEs or the indigenous businesses for us to help the banks to understand that we are a safe bait for them to for them to invest in us, because it's business for them. Yeah, but they would want to understand the risk, and we need to help them understand that. And this is why, I know that's what we're going to talk about a bit in terms of what it takes to help the bank understand us better, and therefore support us to execute on this opportunity. Because for me, the banks are the real unblockers for this opportunity, but they need to be helped for them to do that.
Yeah. Excellent. Now, Crispin, you talked about the banks. On one side, the SMEs want to deal with the mines. They want to take advantage of the local content bill. They are eager. They are ready in inverted commas. On one side, the banks, as we've seen in the bond, have the money, or at least they participated in the bonds.
Yes.
What is it that can be done to bridge this gap? We talked about helping the bank. What are some of the initiatives that can be floated out there to, give some kind of comfort to the bank that yes, this is doable. There is something that can be done. Could you share some initiatives that can be floated to the financial institutions?
Absolutely. So let's look at it from the bank's eyes. They don't hate SMEs. They don't hate. But what they hate as a bank is if they can't understand the uncertainty. They call it unpriced uncertainty. That's what they hate as a bank. So what do the banks look for? The first thing is they want to make sure that the business is strong in terms of its fundamentals, right? And that the business is only strong when you see it from the sales side. Okay. So is this business dealing in profitable? Is it profitable? And therefore, if it is profitable, then it can afford debt, because there's an affordability aspect to it, right? So that's the first part. So we need to show to the banks what is our probability, how are we generating money, what is the profit mix, and what is our plan to make sure that we are able to execute on this opportunity, right? So that is very critical. So effectively, we need to it's numbers. So we need to know how many quotations is this company getting, how many are resulting into sales, and so forth and so on. You see what I mean? So that you can understand, because every business is very unique, so that then they can see, oh, okay, so what you need here is you're not having enough leads. You're not having enough leads for you to get orders and then execute on those orders. Then profitability. How profitable are they? So one of the key ratios that a bank will do is called a debt interest coverage ratio. Yeah. So it's not even very complicated. All they are saying is, when they go from your operating profit, then they get the interest and the repayment. Are you able to meet? What is the factor? You see, how many times? How many times?
Yeah.
Yeah. So that it can show. So they have a minimum. So they would say, oh, okay, maybe we need a minimum of 2, we need a minimum of whatever. Usually it's something like 1.5, because then they know that even if there are fluctuations, then this person is still able to, from their business, they're able to afford. But they need that information. You can't just tell them. You need to show them through your records. Yeah. So this is where now the issue of, and for me, what needs to be formalized, it's not a lot of things. There are just 2 areas. The first one is on the sales side, so that we can give the bank comfort that we are a growing business and we are a profitable business. Okay. The next is what we are calling finance ready compliance engine, which is the CFO pack. What's in there? Yes. One, at least have a budget. So the bank wants to know, how do you see the year? What are you targeting? How big is your dream? How big is the opportunity that you're going for?
Some sort of direction, a plan to show where you
Yes,
are going
a
as a
plan.
business.
Where you're going as a business, because they want to see. Next is, they want to see your management accounts. They want to see your profit and loss. They want to see your balance sheet. They want to see your cash flow. Okay. And of course, they also want to see how you are managing your inventory, your debtors, in terms of what's the quality of your balance sheet. Okay. They want to see that. So you need management accounts month by month, where you are explaining. So you have a budget which says this is where we are going. The management accounts now try to compare with the budget and say, look, this is what is happening. This is how, are we getting there, or we are completely off tangent? How strong are we? Can this plan be relied upon by them to say, look, it's a very good predictor of the future? Yeah. You need a cash flow forecast, 13-week for me, which you are updating every day. Every 13 weeks, you can look 13 weeks ahead. At least you can see whether there is a problem somewhere. They want to see that. You need to have that kind of information. KYC, like some of these decisions, just to onboard a client takes quite a long time. Why? Because the KYC documentation is not up to date. Like, you need to make sure that you have everything cleared up so that you help the bank make those decisions. Tax clearance certificates. Now we even have the NAPSA at the very least. We need to have all those things. So if we can just have these aspects, for me, provided to the bank on a regular basis, then they'll be able to understand our business model, the potential, the risk, and how strong the business is, and the fundamentals, and therefore they will be willing to then support. Yeah. So for the bank, it's business, but they need to understand the risk that they are carrying in, so that then they can provide proper instruments to help with this aspect. So this is what I'm saying. The banks, if you look at their balance sheet, they've got quite a lot invested in government securities. But that money would be available for growing businesses, for this local content, if we can give them that kind of clarity about our business, then, then yeah. So that's why I'm very deeply
Excellent.
persuaded that if
Yeah.
we were to do that, and the time is there, if we are able to do that, and it's something that can be done in a very short period of time, it's just about commitment and, then, yeah, and engaging. Then the banks, I'm very sure that they will come to the party, because for them, this is a big market too. They would end up having it's a big opportunity. So if we have that growth being internalized in Zambia, and for me, SMEs, why I love them is that that's the biggest growth opportunity we have, even for employment for our people. It's in from a small business, because a small business, once it grows twice, three times, they will employ more people. But a large business, they will try to say, no, let's optimize, because they're already at some maturity level. But the small business, they can grow 5 times, 6 times, 7 times, 10 times, and even absorb quite a lot of people in there. And if, all that, value for the mines is not externalized by, giving it to foreign suppliers to them, it means there's so many factors that would, from the macro, at a macro level, that this would help. It would reduce
Yeah.
the pressure on the exchange rate, and all that stuff,
Yeah.
because the value would be here, and circulating within our economy.
Excellent. Just to emphasize the point you mentioned, it's 360 million odd dollars out of
Yes,
the value. Taking the very minimum, the barest minimum, 25% translates into $360 million.
yes,
Now, that is money available for the local suppliers.
yes,
That is an opportunity the banks can tap into. This is money
yes,
that will be deposited in the banks. So if a
yes,
foreign supplier supplies, like you said, there was one SI that was enacted by government on contractors, but what ended up happening was that you give these small contractors, they have no capacity, they've got no financing, they end up giving someone else to do the work because they couldn't.
yes,
I don't
yes.
think that is so. I like the point that you made, Crispin. It's excellent point. Now, as we bring this to a close, I just wanted you to bring it home. How can CFS assist in bridging? What are some of the products that we have that can assist the business, to try and
Or,
be ready to supply the mines, to be an ideal supplier of the mines? What are some of the products that we have at CFS?
okay, yeah. So as CFS, we said, look, we can't just sit on the sidelines. We need to work together and make sure that we turn this opportunity, we realize it. So what we've done is to come up with what we are calling an SME bankability accelerator program. So what do we do? What are
It's
we
nothing
doing in there?
complicated, it's just a term, eh?
Yes,
It's
yes.
people should not be scared. It's just a term. It's
Yeah. Sorry. I appear to be running out of power.
okay. So please proceed, please. Okay, that's how we had Crispin explaining about the products that we have at CFS. He talked about SME bankability accelerator. It's nothing technical. It's nothing impossible. It's just a product that comes in between the SMEs on one side and the banks on another side. So Crispin will be with us to explain the details of how this works, but it's nothing complicated. It's not anything that should scare the SMEs that this is something complicated, but also the banks. It's a good product for the banks, staying out of the comfort zone, staying out of the usual, products and services. I think we're used to invoice discounting and all those products, but here's an opportunity to innovate outside the ordinary because there's this SI which has been enacted by government. And yeah, there is now an opportunity for the business out there to tap into this, SI, local companies, local contents bill, SI number 68 of 2025, which was enacted, which came into being, this year. Very, very important SI for the local business community. I think they've cried, so many times to government to make sure that the supplies to the mines are actually not restricted to foreign companies. But here's an opportunity, whatever it is that the local companies, SMEs more especially, can supply, there is now an opportunity for them to deal with the mines, directly supply different, products and services, because it's now part of the law. Government has said from 20% all the way to 40%, it's being done in a graduated manner. We start in year one with 20%, it goes to 25%, it goes on up to the time it reaches 40%. Local SMEs are now encouraged to be big time suppliers of the mines. So imagine this scenario where 40% of the supplies to the mines at some point will be made by indigenous local companies, not local companies on paper, but if you crack the shell behind the scene, it's owned by someone else. We're talking about 100% locally owned companies. These are the companies that will be supplying 40% of products and services to the mines. In fact, in some sectors, the government has said 100%. If it's training, it has to be done by local companies. Crispin is back with us, and Crispin, you can pick it up. I was just shedding more light about the local content, but of course, you were about to give us an insight on how CFS can weigh in and support the SMEs in various areas. You can pick it up,
Oh
Crispin.
yes, oh yes, oh yes, indeed. Yeah. So so I was saying we've come up with what we're calling an SME bankability accelerator. This is targeted at SMEs, and particularly the ones in the who are interested in executing on the local content. Local content opportunity. So what are we doing? We are building two pillars. The first is the sustainable growth engine. So this is where we now look through, like within, so that we can give the bank the information that they'll need, that will demonstrate that the business fundamentals are strong. What we're doing in that space is coming up with the issue of the sales, like the sales strategy, like we understand, we want visibility in terms of what is the product mix, what is the profitability, and the output from there that we are coming up with is at least, we have a sales budget, sales targets with KPIs month by month, so that, the bank would know what are we targeting on a month by month basis, as well as what our strategy is, which is of course based on how successful we have been. So effectively, a sales budget that comes from there, which then drives the next side of things, which is the what we are calling the finance and compliance engine, which is a CFO pack. And what do we have in there? What we have in there is, one, we have a budget. So like for this year, it's for FY 2026 budget, which we work with the SME to develop, and these are templates that we are embedding. It's not like we prepare and give them a budget. No, this is something that we are embedding as part of how business is done. It's part of formalizing and increasing the governance. Then we are looking at the issue of setting up a management accounts with commentary. These are templates, and we are very privileged to be cooperating with. We're talking to other partners, including local partners. I'm sure you've been running with that. Maybe you even give a bit more detail
Progress.
in terms of you know, progress. They've come up with an amazing indigenous
Digital platform.
accounting
Yeah.
tool
Excellent.
platform, which is ZRIA compliant, and you know, and has all the hallmarks which ensures full compliance. You know,
Okay.
because that's one other aspect to this, is that compliance is key if we are to take advantage of this opportunity. So we have management accounts. We install the 13-week daily cash flow forecast. Then we also install a reconciliation ZRA accounts, as well as NAPSA accounts, you know, where we know that these would be blockers. Because if you don't manage your ZRA accounts properly, you find that your TCC is blocked or suspended, you can't import, you are forced to pay advance tax, you can't remit money to foreign. So there are so many things that would impact business if this is not sorted. So we have that so that we can make sure that their TCC is always active. Their NAPSA is always. So as part of that, we have what we are calling a monthly compliance checklist. So every month there is a compliance status. Everything, either everything is okay, or there is an issue here, it needs to be resolved. So that things are resolved, things will come up. You know, you have an issue with the ZRA, but the most important thing is engage them. We need to make sure that we are engaging them in good time, so that it doesn't become a problem at the end of the day. Then our relationship would be that much better. Then, of course, the issue of the KYC information, and here effectively we, you know, most of it is standard, but we you know, like, we are engaging with the banks, and then the banks are giving us, you know, this is the kind of information that is needed. So that is just at a, you know, these are the things which reduce friction for, say, the financial institutions to come and you know, the turnaround for them to assess the application and all that. If we can have all of these things, we're very sure that then the banks will be installed. Yeah. So over what period? We're actually doing it. It's a 2-month program where we do it with the SME. So it's do it with them. We have a dedicated consultant who helps. You know, we have weekly cadence arrangements that meetings and updates, so that we can install. So we install this over 2 months, and thereafter, yeah, of course, then we can make the arrangements, and either if they want us to hand over, or we can make, you know, subsequent support arrangements based on our other services that we offer. So that's what we are doing as CFS to contribute to ensuring that we can empower the local businesses, to make sure that they're able to execute on this opportunity. Yeah. So where are we seeing the bank playing a key role? For, like we said, just going back, it's an issue of transaction-backed finance. Okay. So when you look at this whole thing, so investment in debtors, investment in stock, and then supplier payments on time, right? To ensure that we can then get terms and whatever. So for us, where we are seeing to even manage because one of the other moral hazards that we have in most of the indigenous firms, because they don't have a strong corporate governance structure, like a board, and things like that. And of course, it doesn't work for them because of the size, right? There is what we call the moral hazard, where somebody gets the money, but because they face other challenges, they divert that money. Instead of investing it in a contract or buying the stock, they use it for other things. So this is where we are thinking, and this is where we are engaging with the banks and say, look, the support that they need is supplier finance. They don't need, because invoice discounting for me is
It's expensive.
very expensive, and
Yeah.
in the long term, in the medium to long term, it actually kills the business because
It's a
they're giving
limitation to
away
growth. Yeah.
profitability.
Yeah.
Yeah. So for me, it's for them to go for supplier finance,
Great.
meaning the bank doesn't pay the local business
Oh,
the money. No, the bank pays the supply. Yeah.
eh,
Then and ensures everything else is paid for there, ensuring in transit insurance and everything else, so that when the goods come, and then on the other side, the mine has to pay into an account that the bank can have visibility to.
escrow
You see
account or whatever initiative they want to come up
Yes,
with. Yeah.
so that they can recover their money. So if we can give them that comfort, for me, I'm very sure that the banks will be very willing to advance that, so that whatever other money the business has, it's money after the financing, the key component, this key cycle has
Yeah.
all been managed. Yeah. So for me, it's not an issue of going with brand instruments like term
Yeah.
loans and things like that,
Yeah.
which for me would not be whatever. It would be because they require quite a lot of issues, including like security and what. But if things are managed very well, you find that even the security requirement from the banks might be minimized. If at all they know that their risk is managed, especially like we said, one, somebody's given the money instead of paying the supplier, they pay, and for some of it it's a genuine problem. You have an emergency.
Yeah.
Yeah.
Yeah. Yeah.
Yeah, so
Yeah.
that's what we are doing, RK, and we
Excellent.
are working very hard with you on this and making sure that we
Excellent.
can ensure that it's installed.
Excellent.
Yeah.
Crispin, it's been an exciting and excellent second episode on the podcast, and as usual, been excellent. Explaining all those financial details. Weighing in on what the president said in the State of the Nation address, and of course, digging in on the recently auctioned bond by the central bank, and of course, explaining the opportunity that lies in between the SMEs and, of course, the commercial bank, and the role that we can play as CFS. Crispin, I'd like to thank you for coming to the podcast.
Thank you so much. Thank you so much, RK. I really appreciate this, man. I really appreciate it.
Thanks a lot, and
All right.
enjoy the rest of your day.
You too. You too. You too. Thank you so much.
Thanks. That's it for our
Yes.
podcast for this week. We are back again next week with another exciting program. So thanks on behalf of Crispin and the entire production team. Thanks a lot, and enjoy the rest of your day.
All righty.
Yeah.
Thanks.
CK, you can pause it.